Ladies and gentlemen, welcome to our Thrive in China roundtable. It is 1 p.m. Central European time. We are back on it with a new topic for this week. Before we start off today's presentation, again, it's just a reference point for me to understand who's in the audience, who's in our community. It would be great if you could give me, and if you haven't done so yet, give me a little bit about your background. Are you newbies, startups, experienced China hands? It's always great if people can give me a little bit of insight as to why they've shown up, why they're here live, why they're watching things on replay, why they joined the community, so that I can always gear things. And especially as we're planning for 2024 now, it does always help to gear topics that are upcoming for next year. So you can share that in the chat. Send me an email, whatever you like, but do give me a little bit of insight as to who you are. And for those of you that are new to the roundtable, for those of you that don't know who I am, my name is Christina Kohler-Kalucha. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China, having done this now for over 20 years. My expertise is specifically in Chinese corporate services and corporate compliance, meaning that I have worked with over 750 international companies that have incorporated their structures in China, and I've helped them implement those structures based on their business models and strategies. I've helped them to create that foundation in terms of corporate governance, corporate compliance, and help them grow and scale in the market, all from the perspective of doing administrative work, which really is the highlight of this topic today, because nobody likes to do administrative work, like, for example, implementing internal controls. If you guys want to learn more about what we do, you can head on over to our website, woodburnglobal.com. It has a full listing of our services, but we also have additional free resources in the form of short articles with all the latest trends, updates about legal aspects, tax aspects, trade aspects related to China and Hong Kong. We also have free ebooks, which we are offering also today. If you want to get a free ebook on the 10 biggest mistakes companies make in China, send me an email. Happy to send you that free copy. So let's get cracking on today's topic, which is how to create an internal audit process for companies operating in China. Now, I want to rephrase this title and say, how do you administratively write standard operating procedures in order to protect your business? Okay, because this is ultimately the fun foundation of today's presentation, is we want to create standard operating procedures within our Chinese organization that we have the ability to train our employees once they come on board. They know exactly what their role and responsibility is. They know exactly what their limitations are based off these standard operating procedures, so that you can sleep at night and you can know that your company is operating smoothly and efficiently. Now, internal audit processes have to be consistently reviewed, have to be consistently updated, because as you grow and scale, there are going to be other types of problems that arise that you have to address then in these standard operating procedures. So these are guidelines that you can write in any shape or form. I mean, I just did one for a client that was literally 4 lines. Step 1, step 2, step 3, step 4, and then I gave attachments of templates that they can use internally to initiate that. This is not something where you have to create a beautiful document that is gorgeous and whatnot. We want to be efficient here, guys. So I know people don't like to do administration work. I know it takes a lot to write down 4 sentences and think clearly how you're going to process something within a company. But if you don't get it done, chaos ensues, problems arise, and that's what we're going to touch on today, is what types of problems can arise. And you know, ultimately the solution and takeaway should be that you need to write standard operating procedures. When you are looking at your Chinese company, and again, every Chinese company is different because it depends on what you're doing. I'm service oriented. You might be trade oriented. You might be a manufacturing facility. You might be doing service and trade. You also have to look at the different departments you have created within your Chinese structure. Do you have a marketing team? Do you have a sales team? Do you have in my case, I have a service delivery team. Do you have a customer service team? What do you have within your organization in terms of divisions or departments? You need to identify what your core needs are, right? And what the risks are. Okay. And today, again, I'm going to highlight, I can't highlight every single risk there is in a Chinese company, but a lot of it is common sense based on what you would know from your own home jurisdiction. Okay. But it's the key, that takeaway again, that I want to emphasize is executing off of this. Okay. So we're going to go through a variety of things, but please do analyze, identify where your core needs are. Now, for me, as I'm incorporating somebody's entity in China, the first thing that I ask once that entity is done is, to whom do I hand over the company chops and licenses? Now, this discussion with my clients, I start way in advance, but you've got to imagine timeline now. You have incorporated your entity in China. You have company chops and licenses. Who manages those? Who's responsible for those? These are vital documents for your China business. Now, some of you who know nothing about China, please realize that the chops are used on a daily basis. The licenses, I have clients who need that on a weekly basis. And it depends what licenses, could be customs key tokens, could be financial key tokens, access to bank accounts. I mean, when I say company chops and licenses, it's really all the key tokens, USB sticks, everything that was applied for during the incorporation phase of the entity. So it's managing the chops, managing the licenses, managing the bank accounts, all of that operational aspect. Who is actually going to do it? Now, you can do many things with this. Okay, you can separate the items. Just the one thing I want you to understand is, please, please, please leave all of these items in China. Some, not all. Okay, I'm bursting my own bubble because I can show you. I'm sitting in Luxembourg and I've got the company chop. So let me rephrase that. Make sure that what needs to be kept in China for daily operations is kept in China. Company chops are not necessarily needed for daily operations. For some companies, they are. For mine, they're not. I keep it to minimize the risk. That's how I sleep at night. But there are certain ones, like, for example, my financial chop has to be kept in China in order to be able to operate our bank account daily. Okay. My cashier has the Yuki token in China in order to be able to access our bank account to input data that is required for transfers. So the first thing you have to understand is, what are the collaterals that you receive once you've incorporated the entity? How are those collaterals going to be used operationally? Who needs to hold them? Should they be kept in China? Should they be kept overseas? Now, I've given just an example here in relation to company chops, okay? So this is a company chop, okay? This is what it looks like. If you can see it, I'll open it up. That's our Chinese company name. This is what it looks like, okay? You can call them seals. So in the US, you would have seals. You can call them stamps because they look like you're stamping. But they are an extremely, and I mentioned it here, a unique feature of doing business in China, different from anywhere else in the world, okay? Chops, these chops, I call them chops, are engraved by the Public Security Bureau in the city where you are establishing your company. They will have your Chinese registered company name, and if you like, you can also put your English company name as well. Completely up to you. You will usually have a minimum of 4 chops that are provided. The company chop, the legal representative chop, the fa piao chop, the customs chop, and I feel like I'm missing a few others. If anybody remembers them from the top of their head, you can put it in the chat box. But you get numerous chops, okay? And you've got to understand what they're going to be utilized for. Oh, sorry, finance chop. I forgot to highlight that one. So company chop, finance chop, legal rep chop, fa piao chop, customs chop, that's 5 already. will be issued. There might be even more, depending on what you're doing. You have to understand that this is more powerful than a signature. So when I write my name and I'm writing as a signature, this is more powerful. Anybody who holds this can sign a contract, can amend a contract, and it would be considered a legal document. Now, what you need to understand is that CHOPs are authorized signatories. They are legally considered more important, and you have to do everything in original. So when people ask me about electronic signatures, I don't mind if you sign a contract and this signature with a pen is electronic. That doesn't bother me. But on everything, there has to be this CHOP. So for me, for example, every service agreement that I issue, I make sure that this original CHOP is on it. I ask the client if they want a copy as well, or if they just want a scanned copy. Completely up to them. I just make sure there is always an original. And I make sure there are 2 copies that I can always send them if they need it. All right. Now, I have had clients who have seized control of these CHOPs, used it as leverage against company owners, so shareholders, to bargain and negotiate for whatever. Okay. So understand the power that is with this. All right. Now, if you lose this as well or break it, it is a lengthy procedure to get a new one. And only one set can be issued by the Security Bureau, which means that if you lose one, or, for example, when you realize how much you have to CHOP, they can also break. As you can see, there should be actually a handle here. Mine is broken. That just shows you sometimes I pull too hard out of frustration. But if they do break, and specifically you can't read the stamp itself, then you have to get them renewed, and you usually have to file a police report to say it's either been lost or damaged in order to then get a new one. So this is all very bureaucratic, guys. Now, how to develop internal control systems, because this is why you're here, okay? But for those of you who don't know the importance of it, I needed to give you a bit of background. So developing internal control systems, right? 2 things that I want to highlight. One is you can outsource that function. You can outsource it to a lawyer, okay? If that's what is going to make you feel better, outsource the custodian of the licenses and CHOPs, or just the CHOPs, to a lawyer or law firm that then is managing them. Or split them amongst personnel, where you say, okay, we feel the company CHOP should be kept at HQ. That's your prerogative, up to you. Just remember, efficiency-wise, not great. I can tell you that out of personal experience. I have to CHOP, courier originals back to China to make sure we've got the whole filing system in place. If I have to CHOP banking documents, which my staff have just given me, so just to give you an example that you can see it, I've been given this lovely booklet of ICBC forms that need the original CHOP. I now have to spend probably about an hour chopping through those and send the originals back. So efficiency-wise, awful, but it gives me security. I know exactly what is being CHOPed. I have a record of what is being CHOPed. I know how it's being used, okay? Of course, we have split our CHOPs. So I have the company CHOP. Our legal rep has his company CHOP, and the financial CHOP and other FAPIAO CHOPs, etc., are all kept in China. That is really for efficiency purposes. There's no other way to go around that, because they are used on a daily basis, and there is one individual who holds those personally, and when they travel with them. They are not then given to another individual. So think about dividing the responsibilities, dividing the CHOPs, so that you don't run into dilemmas of putting all your eggs in one basket, and giving one access to everything. Okay, and obviously I completely understand it. If you are dividing, the responsibility, you have to make sure that if somebody goes on holiday or whatever else, it is handled. The biggest dilemma for us was during the lockdowns when office buildings were shut down, and it just so happened that CHOPs were kept inside safes of different clients' offices, and we didn't have access to those. It did cause quite a few issues. So do think about how you're traveling with it. I travel everywhere with this. So just keep that in mind. The second tip I want to give you is creating a logbook. And this is now the administrative function. It's creating a logbook together with a shared file, whether that is on your server, whether that is through the share drive on Microsoft, however you want to organize this and however you do this internally in your organization. And what do I mean by that? It means creating, we do it in an Excel. It's creating an Excel document which highlights date, type of document, type of chop, reason for chopping, and authorized the person who had authorized it, i.e. the line manager that had authorized that we were able to chop on their behalf. We keep this logbook. We send it to our clients every single Friday, so they have an updated version knowing what was chopped from Monday to, actually it's Friday to Thursday. And then Friday, we send out the logbook. In addition to that, they have a shared drive where they will see for that week all of the documents that have been scanned and put into that shared drive. Okay? Now, this is time consuming. This sucks. This is an activity that is not fun. I completely agree with you. But this is how you are secure on what is going through the company and who within your organization has taken responsibility, i.e. that line manager, for doing this. Okay. Now, another aspect that I want you to think about in terms of company chops, particularly for line managers, is creating an internal system for timing. The worst chaos in existence is saying every single moment of the day, hey, boss, I need this to be chopped. Hey, boss, I need this to be chopped. And it's coming from all different departments. And actually, you don't even have time to properly read what you're chopping. You maybe don't even have a translation of it. And you're processing it. But from every side, it's urgent. It's always, always, always urgent. Always. It's always urgent. At some point, you have to put it in an internal process and say, guys, every Tuesday and Thursday, I'm making this up now, but this is actually what I just wrote as the 4 steps for this client. Every Tuesday and Thursday, you are allowed to give me a set of documents. You can either email them to me or you put them on my desk in a specific section of my desk. I need at least 24 to 48 hours to review them. I will then chop them, give them back to you. You can then scan and give it to whoever is responsible for you to giving it to. The same can be said for payments, which I don't really touch on later on in the finance section, so I apologize for that, but I will highlight it now. There is also the payment section where you can also create an internal system of saying to the authorizer, who does not want to authorize payments every single day, but say, okay, boss, every Friday, we need you to authorize payments. Here is the summary of what payments there are, what they're for, and you create a system around this, okay? Creating systems are fundamental. Otherwise, you will lose your mind and you will lose track of what you are actually doing on a daily basis. Okay. So that is the chops aspect. And again, you have to think about how you're going to do that with bank account management, with license management, etc. So this was just an example around company chops. Now I want to talk a little bit about how to control different aspects of the China operation. Everything from sales departments to purchasing departments to HR departments to finance departments. Now I've looked at these 4 areas, okay? And in these 4 areas, we are also going to look at how it interlinks with other departments, okay? And the importance of communication. So let's start off with sales. Okay, and obviously I haven't touched on marketing, but marketing also needs to have its own standard operating procedure. And maybe I can relate that through one of the examples later on. So sales, billing, and collection. Okay, this is actually where most companies in China are vulnerable because it actually requires transfer of money and the giving away of inventory, right? It's the movement of the actual physical goods. So here we really need to be thorough. We really need to be robust on what type of internal processes we are going to implement and execute on to make sure that no employee, no customer, no logistics provider is going to, pardon my language, screw us over. Okay? So how are we going to go about and do that? And again, this is where you need to create a standard operating procedure for your sales team. I'll never forget a conversation that I had with a client at the beginning of the year who was so frustrated with their sales team because they're new in the market, they're trying to gain new sales channels, and the sales team, in order to, I don't know, I think get numbers in their books, but not really thinking it through, were providing discounts to the point where the margins were at minus. And nobody had actually gone through the calculation with the sales team, had not really explained that if you are providing discounts, it needs approval, that, you know, there's a threshold of how much discount you can give. Even for those where we've not started business yet, you've got to be careful what you're offering them. Otherwise, we lose money, right? And it was obviously only until the documentation of these transactions hit the finance team that the finance team realized what was going on, and they were the trigger to say, hey guys, stop what you're doing, time out, we need to have a team meeting now. Okay, so it kind of shows you how the flow goes, where everybody needs to communicate one with the other. And if you are a salesperson that maybe doesn't know how to calculate margins, or maybe doesn't know how to calculate gross profit, you got to sit with them and educate them on this. Okay, so price ranges for different products have to be firmly set. And they're, you know, every company will have a different way of doing this. I have a fee structure. I have my set fees. I also have variable fees that are based on volume. The fee structure is a guideline. Do I offer discounts? Potentially, depends on the status of the client and their needs. But there's always going to be room for negotiation. But the discount is a discussion with me, not with my sales team and not with my customer service staff. My sales team have fee structures that they abide by. They know what the thresholds are in terms of negotiation. And the fee structure is their template to abide by. And they know what the disclaimers are in relation to that. And they know how to communicate that with the clients. But if your sales team does not have this guideline, does not know what thresholds they can provide, how far the discounts can be offered, or can discounts even be offered? Do they have to go? Or are discounts only offered on certain product ranges, right? These are discussions that have to be discussed. Now, obviously, price ranges that are set in stone will help you to mitigate the risk. However, it is not reasonable to say that you should set your price ranges in stone, because you need to have this flexibility to beat out competitors. You know, if you have a potential client who comes back to you and says, well, I've compared your fees with another provider and they're offering X, Y, and Z. Okay, you've got to have done your competitor benchmarking. So you have to know. You either go back and say, well, we offer more value add. Or you go back and say, well, I'll offer you a discount. But then your salesperson has to know what that threshold is. Okay. So you need to have an internal process of what your salespeople can and cannot do. Okay. That's number one. Number two is that when a sale goes through, your salespeople have to talk to your supply chain people, your operational people, to talk about inventory movement, to talk about shipping, the logistical side of things. And then they also have to talk to finance and say, hey guys, I got a service agreement or a contract signed. We now need to raise an invoice based on X, Y, and Z. You have to have this communication between sales, billing, collection, and I haven't added it here, supply chain. Okay. Then your finance team has to make sure that margins are being kept, that targets are being hit. Otherwise, it's very easy to use that data and go back to the sales guy and say, hey, something is wrong here. So your finance team you have to make sure they also have the responsibility of checking all of this data and information. But if they're not instructed to do that, trust me, they're not going to do it. Okay? They need to be instructed on it. So that's the sales, billing, and collection. So like I said, you know, I start off with my clients, and again, you know, I don't really create, I mean, I can help to create standard operating guidelines and I can help validate them. But in the end of the day, every company has a different way of working internally based on the personality and characters of the people, and especially in regards to the leaders, how much they're willing to delegate or how much they want to do the controlling over things. So everyone's a little bit different. What I want your takeaway to be is these don't have to be complex documents, right? These have to be step-by-step procedures. Step one, this. Step two, this. I was actually looking over in my files this morning over a sales operating guideline that I had created in 2015, and the detail that I went into that, including email templates. That was really back in the day where I needed to guide people on how to write emails and sales emails. But I went into such detail. It was a PowerPoint presentation. It was going literally step 1, 2. It was in number format, not a story or anything behind it, just easy that it was a PowerPoint that I could explain it and educate the team on. And I believe in those days we were doing it every quarter period, just refreshing people's minds on how to do this. So think about creating that. The next is purchasing. Now, same with selling. Companies create a budget. When you are creating a budget, you know roughly how much you want to spend on the cost of goods, right? You also probably and hopefully have done a benchmarking to know roughly how much a product would cost, right? So let's say on average, a product costs, I've used here, 500 RMB, okay? Now, if suddenly you are seeing in your accounts that these products are being risen to 700 RMB, that variance, you have to understand where this variance is coming from. And hopefully your purchasing team is approaching you on these variances before they actually happen to discuss whether you transact with that supplier or not. Okay? But if they don't, then somebody has to catch that variance. And that usually comes from the finance team. Okay? So if you are catching out on that variance, please, please, please make sure you highlight it. And that's a warning sign that you have to talk about it. Okay. What we don't want is that kickbacks are garnered, that, right, that you have these special deals between the purchasing department and the suppliers. Now, to prevent fraud in purchasing, it's tricky, especially if you have a very small team. But obviously, if you're bigger, it's kind of dividing the different tasks amongst the staff. You know, staff, like I mentioned here, staff responsible for payments should be different from those physically handling the goods, maybe even different from those physically handling the negotiations. Maybe you want to be involved, especially if you're a smaller team, in those types of negotiations as well. Okay. Staff rotation is an effective way to avoid fraud risks if possible. And by staff rotation, I do mean getting new people in and rotating that staff. Not that you have somebody in your purchasing department that's been with you for 5 years and is developing all of those relationships with those suppliers and is starting to do under-table dealings. So don't have a fear of having turnover. This is a strategic way of reducing risk. You are aware that you will have to rotate staff. You have a backup of resumes that are readily available for you that you can then just rotate staff every 2-3 years. This also allows you, for example, to sign just 2-3-year contracts with people as well. But this is a good way in the purchasing department to mix it up a little bit. The next one is human resources, okay? And I just had this situation internally within my own organization. And maybe I'll start off with the case study. I never ever sign fixed term contracts. My contracts are always open-ended contracts because then I do not have to think about renewal dates. I don't have to track renewal dates. I don't have to have discussions with employees about renewing contracts. I just stick to open-ended. And it just so happens that I had one staff who was on a fixed term contract, and I completely forgot to renew the contract. But on top of that, they didn't remind me to renew it. And they did that strategically because in China, without a renewed contract, you have to pay double salary every month until that contract is signed. And that's the legalities of stuff. The outcome is that I obviously did not keep the staff because they only reminded me about 4 to 5 months later, which showed me they didn't want to stay anyway, terminated them. And instead of paying for, just termination compensation of the years of service, I also had to pay, in addition to that, the double compensation for those months that there was no contract. So try to simplify your operations. I know sometimes I just mentioned in the purchasing department to have fixed term contracts so that you can rotate staff. If you do that, make sure you've got it in your calendars when to renew, have those discussions 2 months in advance. I had completely forgotten to put it in my calendar. Did not have a backup on that whatsoever. I don't have an HR department. I handle all HR issues. So fault comes on me. Okay. So make sure that 1, employment contracts are signed. 2, you have an overview of all your employee breakdowns. And that comes into effect with starting dates, gross salaries, any benefits that are being offered, etc. Make sure you have this overview readily available. And if they do have fixed term contracts, that it's in your calendar for those discussions and they are invited to those meetings to discuss the renewal of the contracts. Relationships are fundamental in China. But one thing that also happened to me as I started off my business was not rocking the boat and not firing underperforming employees. Now, terminating contracts is tricky business in China. No doubt about it. I have been called into labor arbitration. Okay, not so often, actually, if I think about my 20-year career, but I've been called into labor arbitration 3 times for, how do you call it, false termination, like for me to have no reason to terminate the staff. I was prepared for all those meetings. I also had my lawyer go with me to those meetings so that I had leverage. Prep was done prior to those labor arbitration meetings, which are done at the labor bureaus. And just a couple more tips here. Go to those labor arbitration meetings at least 30 minutes to 1 hour earlier so you can sit down with the labor officer and talk about your issues with the employee one-to-one before the employee arrives. It always takes the employee off guard. These are tips that I learned from my own lawyer about how to do that. But, worst case scenario, and that's what I do now for most of my terminations, if I have to do them, is I talk to my lawyer first. I talk to a labor lawyer. I say, listen, I want to terminate XYZ. Here's a copy of the contract. Here's why I'm terminating. If I have additional proof, like emails or just saying I have conversations recorded or whatever else, then I provide that to the lawyer as well. We then draft up the termination. If I'm very nervous, which can happen, because I just don't know how the person's going to react, I bring my lawyer with me into those termination meetings. We record them, and it's like having a guide with you. So I want people to realize that with human resources, it's always tricky business because we're talking about people that you've hired, people that have worked for you, who know your business inside and out, who now you are going to terminate. So it's hard. The word I was trying to find earlier was wrongful termination. And so I want just people to realize that there are resources on the ground. I've got a lawyer, I've got a labor lawyer supporting me on this. I've been burned one too many times in regards to this, that sometimes I just don't want to do it alone. So I do spend the money on a labor lawyer to help me. When I have to go to labor arbitration, I again use a lawyer, because what I don't want to do is make that business rolling And I just want somebody who is fully knowledgeable on labor law who can help me out. Okay. Now, with human resources, one thing that I do want to highlight is the recruitment process. Now, what I've highlighted here is really expensive to do. So I want to give you a couple of tips on what is the easiest way to do it. When you are interviewing people, okay, you're going to get a resume. They may have been referred to you, which is great. That referral sometimes means nothing. So you have to do a background check, okay? I normally do a multi-stage interview process. So our stage is 3 steps. They first get interviewed with my head of client services, who's my right-hand person in China. I'm very lucky to have that individual. It then comes to me. And then the 3rd stage is both of us together. So it's a 3-stage process. In that moment in time, you know, it depends whether they get lifted up. It could be that my head of client services says, nope, rubbish, Christina, no worth your time to interview. Could very well be they come to my level and I'm sort of like, nope, I've went through the skill set I don't like. Or it could be that they go all the way up to stage 3. When they hit stage 3, I actually ask them to do an exercise. So I do a writing test and I do a case study test that they have to prepare for that 3rd interview and present to us. In this 3-stage prong process, usually we figure out if they've lied on their resume. We just look at the different personality characteristics and skill sets. But what we have found to be a great solution is this writing test and case study test. It's given us a lot of insight. And I do this for every stage. I might not interview the lower ranks within our organization. I do more mid to senior management. But this 3-prong process is actually something we've implemented even for new graduates that come on stage. I'm not involved in those recruitment steps, but it's other members of our team who are doing that, and they know what we need in our organization because they're all part of that vision and that strength. So I use the others to help. Not everybody, but the key people who we know are long-term within the organization. Worst case scenario. Now, also on top of that, if you are interviewing higher level people, you can go to companies like Dun & Bradstreet, and there are plenty of others who do background checks on these individuals. Now, I would not spend that money on new graduates. I would spend that money on senior management personnel to do a background check on their status. Usually you pay around, I believe it's around 1,500 to 2,000 renminbi for that background check. And, you know, it could very well be that Dun & Bradstreet can't find anything on them. But, you know, when you are asking them to be interviewed, you do need their ID copy, passport copy and whatnot as part of the documentation. If you don't ask for that, ask for that. That's what helps you to do then the background check on them. And you can get sometimes quite a lot of insight into their situation, their status, etc. And again, I highly recommend doing that. Then, of course, you've got references. Of course, you might not want to call the previous company, but you might want to call other people to understand how they were. A lot of people don't execute on this. We execute on it, 1 phone call, especially for senior management personnel. So try and execute on that. All of this, and then obviously if you don't want to go through all of this hoopla yourself, you can go through a recruitment firm who should be doing all of that vetting and all of that 1st stage preliminary interviewing themselves, okay, and the background checks too. Obviously, they're going to be more expensive. They're going to charge a percentage on the annual salary. So you have to see whether that's in your budget that you are able to do that. But go create an internal process of how you're going to recruit people. Create this standard operating guideline that you can also delegate the work and you don't have to do all of this yourself. Because this is heavy stuff. This can take up a lot of your time. As I mentioned earlier, this was the case study that I highlighted at the beginning. Labor contract management, renewal contract management. Also, make sure your contracts are up to date with the newest legislation. Your contracts should have confidentiality clauses, non-compete clauses, personal data protection clauses. I don't know if they need innovation clauses in terms of IP that is being developed within the company, but make sure you are completely protected within these labor contracts. If you are just using a local payroll agent who is giving you a contract template and it's only in Chinese and you can't even read it, that is useless. Make sure the clauses are all there. What you don't want is to be screwed over and have to pay so much money out of your budget, like I did at the beginning of this year, which is going to cost us. It's going to hit my bottom line for sure, right? So make sure you've created internal systems as well to manage all of this from day one of your operation. Now, the next point that I want to talk about is finance and having a good finance team to spot check and find all these solutions, okay? So like I mentioned in sales, I didn't mention it in purchasing, but let me mention it in purchasing. What you need to understand is that your supply chain, all the way from sales to, sorry, let me rephrase that, from purchasing to sales to logistics, warehousing, needs to be combined with finance. I always say this in my webinars, roundtables, one-to-one discussions with clients. Finance is always the last to know, and then it's the expectation that finance should fix the problems. No, we are there to control. We're a finance company, so that's why I'm saying it. We are there to control. We are there to see warning signs, but we need the aid of all the other departments to assist. Okay? Cannot be the expectation that finance does everything. Right? Finance departments are not evil. They're good people who are just trying to get their job done. But if there's a communication lagging, it's usually because sales is not communicating with finance, purchasing is not communicating with finance, inventory is not communicating with finance, and worst of all, those three departments are not communicating with each other either. Okay? So one of the dilemmas that finance has is always around inventory management. And I can say this with almost every single company. You can be guaranteed that there is going to be a mismatching of records between the internal inventory system and that of the warehouse management system. Okay? And it is always expected that the finance team fixes this. Okay? We can, when I say we, your finance teams can fix this. Okay? But it is tedious. So what I want to emphasize is to create a spot check system. And create a spot check system within your organization where you say that you have to do inventory checks to verify the records. Now, I don't say do this every single month because depending on the amount of inventory that's sitting there, you might need at least 2 to 3 man days with 2 to 3 staff to be able to really do this type of spot check, okay? Our philosophy is to do it twice a year as a minimum. We usually recommend doing it by June 30th so that you have a spot check done by June 30th, that you know the inventory count by July 1st. And you also do a spot check between December 27th and December 31st, again, to have clear records for the new fiscal year come January 1st. Okay? Now, these spot checks can be done by whomever you want to do it. Generally, it's always finance that has to do it, which is fine, right? But it's not just the mismatching of records that I want you guys to think about. I also want you also to think about the quality of the goods. Should you be investigating that? If you are trading in perishable items, are you looking at expiry dates? These are things just to clean up your warehouse, and doing that twice a year. Does it cost you money? Yes, it does. You can even outsource this function. It's not as expensive as you would actually think it to be. Okay, we're not talking about 50,000 RMB now and doing a spot check for 3 days. We're talking about maybe 10 to 15,000 RMB, if even. So please, please, please do think about implementing that. And I want to highlight this here because this is actually where most of our frustrations stem, is inventory management, meaning product in, quantity, price, product out, quantity, and price. There needs to be a tracking of this. I want people to remember that outsourced providers generally do not provide that service. This is something that needs to be created in-house. So you can do this in-house with your sales team, with your purchasing team, with your logistics provider, but creating this in and out sheet of inventory, this movement sheet of inventory is fundamental. You can also do this in an ERP system, but this is where it needs to be done from day one, from that first purchase all the way through, because this is how margins are calculated. This is also how to track the mismatching of the records. And somebody needs to take responsibility of that. All right. So it's important, again, to track that. The next one is FAPIAO management. Now, there are two problems. I haven't outlined all the problems, but there are two problems that are very common, which is that there's no input FAPIAO received for a purchase made, or there is incorrect amounts on the FAPIAOs. Now, the reasons of this occurrence can be that the supplier's accountant is not informed about the transaction. It also shows you that the communication levels within other organizations are horrible. Or the supplier intentionally delays the FAPIAO being issued for their own books, or the staff forgets to ask for the FAPIAO when a purchase happens. Your staff forgets to ask for the FAPIAO when the purchase happens. And obviously, this is a huge problem because the loss of a FAPIAO obviously reduces the input VAT for tax deduction. Okay, so how do you manage that? Who's responsible for that? Is your purchasing team responsible for the follow-up with the suppliers to obtain the FAPIAOs, to chase them, to push them? I want you all to notice I said purchasing team and not finance team. In terms of the incorrect amount on FAPIAO, this can arise also from suppliers' manual mistakes of issuing FAPIAOs with the incorrect amounts. We are all human. People make mistakes. It's really important that when you receive that FAPIAO, either the purchasing department or finance department, to review the FAPIAO, make sure all content within it is absolutely correct. The minute that there is an issue with the FAPIAO, it needs to be reissued and canceled and then reissued. But if there is an incorrect amount on the FAPIAO, then again, there is a loss of the input VAT, particularly if the amount is less than it should be. Okay. Now, in all of these situations, this affects your business. It affects what your finance team can do. It affects the overall view of how your business is looking at that point in time. Output VATs. Now, your customers may request for the FAPIAO for same sales twice, usually because they have lost the first FAPIAO. So if your clients have lost their FAPIAO, it needs to be reissued from the tax bureaus, not duplicated, okay? It needs to be said to the tax bureau, our client has lost the FAPIAO, they need it for their own business. We need to reissue it so that they can see it. And then it's up to the tax bureau to decide what is the next step after that. Obviously, if you duplicate FAPIAOs for the same sales, you're duplicating your output VAT for those transactions. Again, not good. Undetected sales receivables with FAPIAO issued. Now, certain customers may have a policy of making payments only after the FAPIAOs have been received. So you have to issue the FAPIAO first to your customer, and then your customer is going to pay you. But you need to be aware that you are liable for the VAT when a FAPIAO is sent to your client and issued, okay, regardless of whether the revenue is received or not received. And this becomes an issue, especially when the FAPIAO is already sent to your customer without sales revenue received, because you are liable for that VAT automatically in that month where it's been issued, okay? And then if they are delayed on that payment, also causes problems. Now, the solution to all of this is that there needs to be an operational guideline fundamentally prepared by the finance team where FAPIAOs are being tracked. Okay, so purchasing FAPIAOs, purchases that are made, okay, those purchase orders need to be tracked with FAPIAOs, and you need to have a guide on what is missing. And this is then a constant discussion between your purchasing team and the finance team. In terms of sales, you also need to discuss with your sales team and have a track of what FAPIAOs have been issued. And this obviously becomes complicated if you've got payment terms, 30% down payment, 30% upon delivery, 40% upon whatever X, Y, and Z, right? So per client, per order, you need to have a tracking record of that your finance team has issued those FAPIAOs and that money has also been received. Okay, otherwise you've got an outstanding AR, and then you also have to track who is handling that outstanding AR. Okay, so there is a lot that has to be coordinated between merchandisers, salespeople, and finance. Okay, and then the inventory component also comes in as well. The next item I want to talk about is expense claims. Now, expense claims is paperwork heavy. It is an intensive process for any business. The beauty is that there are now apps that are available in China to ease the whole operation of these expense claims, meaning that your staff can take a photo of their FAPIAO, upload it into the app system. It goes to the line manager for approval and then gets paid. Different apps work in different ways. It's a matter of whether you want to invest in an app or not, and whether you find it useful or not, okay? What I want to highlight in this slide is that there are line managers who do not thoroughly check their employees' expenses. In fact, when an expense report is sent out to the line manager, I am always surprised when I get a return within less than an hour and I see the email come in, approved. You just know they haven't checked it. Now, we obviously can check it, increases our service fees. However, it really should be line managers who check this. Why? Because they should understand what their employees are doing, where they're traveling, what the expenses have been used for, and should check that they're real, right? And that they make sense and that they follow company guidelines. By company guidelines, I mean, do you have a budget for client dinners? Do you have a budget for client karaoke and entertainment? Do you have a budget for X, Y, and Z? And is your employee staying within that budget? That then affects, if they don't, it affects your bottom line. All right. Now, what we have to remember is that there are 3 areas for expense claims that are critical. We don't want to incur additional tax liabilities because ultimately, if your employee is spending more than you are going to be spending more on taxes, if your opportunities for employee fraud are there, meaning nobody is checking and they're just spending, and all you do is within 30 minutes say approved, they'll just keep spending. Why wouldn't they? Why wouldn't they take advantage of the situation? And then obviously there's a loss of budget controls. And this is again where the finance team comes in. They're looking at your actuals for that month. They're seeing that it's totally outrageous expenses compared to your budget. And they will be the trigger that comes along to you, the line manager, to say, what the hell is your team doing? You haven't gone through any forms of approval processes. Now, just to highlight a couple of common schemes. One is missing FAPIAOs. So you need to implement a tracking method in case a FAPIAO is truly missing. The employee should request the supplier or the vendor to reissue the FAPIAO in case they've lost it, or cancel the FAPIAO of the previous one so that nobody has a double taxation situation. Duplicate or fake FAPIAOs. Now, a duplicate or reissued FAPIAO is most likely to occur with electronic e-FAPIAOs. The QR in the top left corner of an official FAPIAO can be scanned to look up whether it is authentic or not. Unrelated expense claims, and this is where a lot of issues arise because employees will say, oh, I forgot to get the FAPIAO from the hotel, but you know what? I'm going to use my shopping FAPIAO for food to take over that one. If you're okay with that, absolutely not a problem, but make sure that you are checking all of this and that you agree to it. Incorrect tax info. Now, if the company's information on a FAPIAO is incorrect or incomplete, it cannot be deducted from a business's income. So you need to make sure your employees have the right company information to put on their FAPIAOs. Booking expense claim deductions. Expenses in China come with certain limitations based on the company's annual gross revenue or the annual gross salary of employees, for which it can be deductible. And you need to be aware of what those limitations are. Are you going over those benefits? What is happening? Now, just to create a very simple claim control system, 5 steps. One is obviously the creation of the expense. So staff are required to submit the supporting documents for a business expense claim with a cover sheet. Okay. Staff needs to make sure that those FAPIAOs have the right information on them. They need to check them and sign off on them. That is then sent with the cover letter and the supporting documents to a line manager who is authorizing them, reviewing them based on budget allocations. I just had a client actually the other day who told his staff, basically, this is the last time I'm going to approve a weekend weekend client visit. He said, you should not be visiting clients on a Saturday or a Sunday. I don't know why you did it. I don't know why you didn't get approval for it. I will approve this expense, but this will be the last time I approve this expense. And that I was relieved. He was checking what was going on. He was even checking the dates, analyzing when the guy was doing the visits. Okay. So your line manager needs to go and authorize and sign off. The collection of the original documents and the cover page then have to go to the accountant for bookkeeping with the signature of the line manager. And it is really up to the accountant then. It's at their own discretion to authenticate the FAPIAOs and the supporting documents. You will never find an accountant who authenticates every single FAPIAO, but they will do random checks, or they should be doing random checks. Okay. And that leads to the audit part. They're going to audit a couple of those FAPIAOs, but they probably won't do all. So make sure that audit procedure is instilled within the accounting team. And then obviously goes to accounts payable and the payment is made to that employee. Okay. Could be that your accountant does that as well, or it goes to another team who does that. So it's a very simple step-by-step procedure. And it's a matter of making sure that these standard operating procedures are followed and done. And if your staff are not doing it, then that's an issue and it needs to be raised with that employee, right? So we're finishing there. I wanted to finish on this example. This is basically the story about setting up internal control systems within your organization. And I get it that this is administrative, but it doesn't have to be beautiful. You need to just create step-by-step procedures. If you want to put it in a memo format and you want your team to sign off on it, that they've read it, by all means do it. Okay? But you just need to make sure that it gets done and ultimately that it's being executed upon. So that's the end of today's presentation. I'd love to hear what your biggest takeaway from today was, or if there are any additional info pieces you would need. If you do need help to create standard operating guidelines or to implement internal controls, be more than happy to help you. We don't create formal ones, but I can kick you off in the right direction, and even create just standard step-by-step processes like I've done for a couple of clients recently. In the email that I'll be sending out later today, there will be a link to my diary. You can set up a free 15-minute call. Happy to see if we can be of assistance or not. If I can't help, then I'll try and lead you in the right direction of where to go. But don't hesitate to set up that call. And then don't hesitate, if you guys have WeChat, we always bring these topics off onto the WeChat group, which is the Thrive in China WeChat group, connect with me. My ID is KNCOLUCCIA, and I'll send you the invite for the group chat, and then you can join our discussions. And last but not least, next week, we are talking about how to avoid a tax audit in China. This is really geared towards those of you that already have companies in China. Come along. One of the chapters on that is internal controls, but there are many, many other aspects we're going to look at in order to avoid tax audits from tax bureaus. So if you've joined live, this is the link. It's the same link for the rest of the year. So just come along Wednesday, 1 p.m. Central European time, 7 p.m. Shanghai time. I look forward to seeing you there. No questions have popped in, but I want to thank everybody for coming, and stay tuned. Have a great day. Bye.